All right. Class is in session, so listen up. The last two video updates that I gave you were called caution, there's warning signs, and then the most recent video update said that we had even more warning signs. Now fast forward to today and we are pulling back and the sentiment is quickly changing because if you go read the comments from those videos, there were a lot of bulls telling me that I was incorrect to be cautious or to even be bearish. And then if you go before those videos when we were bullish, there was lots of bears telling us that we were wrong to be bullish. So the first thing I want you to realize is that I've been doing this long enough to realize that it doesn't matter what the hell anybody says, you need to follow what your chart is telling you. And if you've wondered why I've been so accurate on the market, it is simply because I do not care if the market goes higher or lower. A lot of you sound like cheerleaders out there constantly rooting for a certain team, which is completely fine. Don't get me wrong. You're allowed to be bullish or you're allowed to be bearish. But if you're not profitable, it doesn't matter which team that you're rooting for. It is more important that you're a good trader that knows how to manage risk. And that is what we are doing each and every day on the Stocks Channel Discord server. And that is why we are absolutely crushing this market with incredible accuracy on where the market is likely going, on top of having great risk reward setups. So tonight is going to be very educational about exactly what you need to be looking for going into PCE data, and it is going to be focused on trading PCE data because at the end of the day we are traders and PCE data is likely going to be a volatile event that should be very good for trading. I'm also going to tell you how you should be looking to position going into swing trades, so make sure you're paying very close attention and listen to the details of the price action that I'm describing and try not to be one of those cheerleaders constantly just rooting for the team that you like best. All right, now that we've addressed the cheer squad, let's go ahead and look at the daily chart of SPY, and we can see today we came exactly down to the gap fill at 523. And this is a very significant level because as you can see, this is also a test of the rising 20 daily moving average. So while this gap is now filled, we are also sitting at a significant level of support, which is also a retest of the breakout of the previous all-time high. So this is a very common technical pattern that when you get a bullish breakout, typically speaking, you need to come back and retest that breakout to prove there are still buyers at that level and it's not just a false breakout before you go higher. But the tricky part about trading this is that tomorrow we have PCE data and we did gap down, so there is a gap to fill up here. So you have to take risk overnight with a swing trade if you want to capture any moves to the downside or the upside. Now, as far as levels go, we are going to talk about how you are going to trade around levels, but as a swing trader, this is a no-brainer entry if you are a bull in a bull market that clearly sees this is a bull trend and a retest of the breakout. You are taking this trades 11 times out of 10 because even if it does not work out, it is going to be such a small loss for the potential of a huge gain. And there's just no way any bullish trader is going to sit on the sidelines when you are getting a bull breakout retest. So to make this very clear, today was a buying opportunity because we are in a bull market, we are in a bull trend, and we are getting a retest of a bull breakout. That is as simple as it needs to be. There is no way we are going to sit here and count pennies and say that you said it had to hold above 523 and we are sitting at 522.60. If you really think those 40 cents are going to matter if we have a 3% up move tomorrow, then you are completely missing the point of a decent risk reward setup. We are not sitting here counting pennies and coins. We are simply looking at this chart and seeing this is a bull breakout retest. So that is a no-brainer entry for you bulls. If you're bearish, obviously you're not going to take this entry because you think we're going to go lower, but that also doesn't guarantee you are going to make any money because there's a good chance the market is going to bounce from here. And if you're shorting the market, you're going to lose. And if you're not in the market, you're just going to be sitting there having FOMO. So it goes without saying, you have to put on some risk if you want some reward. And this is definitely a zone that is worth putting on risk because it is a very simple technical retest of a bull breakout. And that is the time a bull is going to add risk and look for higher prices. So as you can tell from the arrow, I was already predicting that we were coming down to 523. And then the second part of that prediction is that we're going to bounce from this zone, again, not counting pennies, and then go higher towards a brand new all-time high at 534. So for that reason, I am deleting this target at 530 because it doesn't matter. There is no way we are just going to 530 and then not going to 534. And then in the bearish scenario, we're not even going to go to 530, so we don't even need to worry about it in the bearish scenario. So right now, you have two levels you need to pay attention to. We've already talked about the swing trading entries that if you are bullish, you needed to enter today because by the time PCE data hits tomorrow, the move is going to happen very quickly and you're not going to have any time to react. So you realize that you have that risk because there's also the chance it goes lower. Now below 523, we have two levels we need to watch, and it's very simple. Below 523, if we have a negative reaction to the PCE data, we are going down to 517 very quickly. And if we break down below 517, we are going towards this gap fill at 512. So 517 and 512 to the downside below 523, and above 523, we are easily going higher to another brand new all-time high at 534. There's just no reason to overcomplicate this. It is going to be that simple. So you need to go now figure out whether or not it is worth the risk to you for the upside reward. Or if you think we're going lower, then you're going to react to the price action. But there is no way that you should be short sitting here at support, because there is no good risk reward setup sitting here short, sitting at support in a bull market. Now you can disagree with me, that is completely fine, but I'm trying to teach you how to trade, and this is how you need to start learning how to trade. You don't short bull markets at support. That is a recipe for disaster, and that is a recipe for losing lots of money very quickly. So that is as simple as it needs to be going into tomorrow. I am not going to say any more than what I've already said. Watch that critical risk level, and it doesn't matter if you're going short or long. That is your risk level that you need to manage your risk from. On the NASDAQ 100 triple Qs, we were down 1.07% today, and this is going to be very similar analysis as SPY, except the only difference is we did not get the retest of the breakout, and we did not fill the gap. So for that reason, we cannot completely rule out the possibility that the triple Qs can go lower towards 446, but going into PCE data, it is not worth it to worry about this move to the downside, because if we do go a little bit lower, that is simply going to be another buying opportunity at 446. So I still do believe this is a buy the dip scenario for the triple Qs for the upside target at 461. That's okay if you disagree. That's why this is a market. We all have our own opinions. But as we pull back, I will continue to add to my long positions, and I will look for that new all-time high until price tells me not to. And the only way I'm getting risk off is if we cannot definitively hold this breakout at 446. And in that event, I will get a lot more bearish, and I will look for a gap fill and support zone between 434 and 436. So it is as simple as watching this level at 453 and 446, knowing that you needed to add on some risk overnight if you're bullish because of the PCE data. And if you're bearish and you're shorting at support, all I can say is good luck. On the Dow Jones, we were down 0.81% today, and we hit the price target today with the price action right on schedule, and we actually went a little bit lower to the bottom of the Bollinger Band. So we can now delete this bearish arrow that we had on the Dow Jones, and I'm going to tell you right here, I am getting very bullish on the Dow Jones, and I think there is a very easy trade to be made to go all the way up to 387, and I do believe we could actually go all the way up to 391 and higher. But this is a very simple trade of closing two gaps at 384 and 387 while we are very oversold, and this is what's called a dead cat bounce, because this is a form of capitulation when you just go straight down without any bounces, and then all of the sellers that wanted to sell already got out of the market, and now you are due for a dead cat bounce, and that is easily going to take us to 384 and then 387. And then once we get there, we need to see if it's just a lower high within a downtrend. And even if we go to 391, it's still going to be possible for it to be a lower high. So right here, I am staying long on the Dow Jones above 380. And if we break below 380, I will continue to buy all the way down to 377. And then below 377, we need to manage risk very carefully because it's possible we flush down towards 370. On the Russell 2000 IWM ETF, we were up 0.95% today. So on a day the rest of the indices are selling off, we actually see the small caps bouncing, and we did hit the price target right there at the gap fill at 204. So we can now delete this arrow. And we can see up here at the gap fill, we need to be very careful as we approach this resistance zone right around 205 to 207. So it is possible this could still be a downtrend, and we could get rejected up here between 205 and 207. And in that event, we will be looking for two gap fills at 203 and down here at 200. But these Bollinger Bands are starting to squeeze, and you can see 200 is currently outside the lower Bollinger Band. So do not rule out the possibility the small caps can continue to climb, but we will want to wait for that bullish confirmation with that break above 207. And then above 207, we should be well on our way towards 210 and 214. And then you can simply just get risk off if we can't hold this support zone right around 202 for the gap fill down here at 200. On the RK ETF, we were down 1.59% today, and this is still a bear trend while it's below 45, so we're going to keep it very simple. Your downside supports are 42.4 and then 41. And the only way we're getting bullish is if we could break back over 45 and 46. On the VIX, we were up 1.33% today, and the VIX did hit my price target because I told you there was a good chance during the pullback the VIX would spike up towards 15. But now that the VIX is at 15, you can see it was outside the upper Bollinger Band. And there's a very good chance from here the bulls can simply crush the VIX back down. And in that event, we're actually looking to get more bullish, just like I told you on the indices, as the VIX is coming back down towards 13 to 12 yet again. So now it is time to consider the bulls are back in business, buying the dip at the breakout retest, and we're going much higher from here. On Bitcoin, we're currently trading just above 68,000, and you can see Bitcoin still does have this bull trend, and while it's above 65,000, I think it's going to 75,000, so that is a bullish indication we are likely going higher until we break down below 65,000. If we break down below 65,000, get risk off, and it's that simple. On Nvidia stock, we were down 3.77% today, and just last night I talked about being very cautious on this stock because it was way outside the upper Bollinger Band. We were hitting price targets, and I told you there was a very good chance it needed to pull back. And from here, you can see that we can easily come back all the way into the 1030s and 1050s and still get a higher low within a bull trend. So just be very cautious here. I'm not trading this stock in the short term. I just want to see more price action before I decide where it wants to go. And if you're interested in any of the levels here, you can see them on the screen. We hit the price target at 1155. We need to break that if we're going to 1195. And on the way down, we're looking for support at 1089, 1064, 1056, and 1032. On Tesla stock, we were up 1.48% today. And intraday, we did break above 180, but it was a false breakout and we did not hold it. So if you want to be bullish here, you need to stay bullish above 177 or 173. Below those, you can get risk off because we're likely still in a downtrend or at least going down to 167. And in order to get bullish, we need to either break above 180 and hold it or break this high at 185. And above that, we're going to 197 and then 207. On Apple stock, we were up 0.53% today, and we did continue to hold above this breakout zone at 190, and above 190, it is possible we're going to 195, so that is another reason that we could continue to go higher within a bull trend. For Apple, just get risk off if we can't hold above 190, or if you want more risk, you're staying bull above 186 and then getting risk off below 186. So jumping back over to the S&P 500, keep in mind everything that I said about being a disciplined, good trader that knows how to manage risk. Forget about all of the cheerleaders who want to pick a side and just sit there and talk about why their position is going to win, because we know the only thing that matters is following the chart and filtering out all of the noise and managing risk around these critical risk levels. Set up your trade plan now, be prepared for the bullish scenario and the bearish scenario, and then react to the price action accordingly. And I do believe the PCE data should break us out of this range, and I do think we're going to get a nice leg in this market in the month of June. And there should be plenty of volatility, so as long as you're focused, you should be able to do very well as a trader. We are absolutely destroying this market in the Stock Channel Discord server, blowing all of the benchmarks out of the park, and continuing to put ourselves in trades with the best risk reward setups. If you want to join the Stock Channel Discord and get access to all of my intraday updates, technical analysis, and my trade ideas, you can find out how to join the Discord server by clicking on the link in the description of this video. So thank you for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.